please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Opening at 34 and closing, can't see it around here, it's just below $30 right now. Certainly an impressive first day. More Chinese IPOs coming later in the week.
So a trio of records for the Dow, the S&P, and the NASDAQ today. What a day. More earnings coming your way on the second hour of the closing bell with Kelly Evans and Company. See you tomorrow, Kel.
Thank you, Bill. Welcome to the closing bell, everybody. I'm Kelly Evans. A decisive close above 23,000 for the Dow today. And it didn't take that long for us to do it, only about 50 trading days. We closed higher by 160 points there, paced by a huge move higher in IBM. We'll talk about that in just a moment. The S&P 500 also closing at a record high of 2561 here. It's a much smaller move, just about 2 points.
What a day. More earnings coming your way on the second hour of the closing bell with Kelly Evans and Company. See you tomorrow, Kel.
Thank you, Bill. Welcome to the closing bell, everybody. I'm Kelly Evans. A decisive close above 23,000 for the Dow today. And it didn't take that long for us to do it, only about 50 trading days. We closed higher by 160 points there, paced by a huge move higher in IBM. We'll talk about that in just a moment. The S&P 500 also closing at a record high of 2561 here. It's a much smaller move, just about 2 points. The NASDAQ Composite looks like the same story with a tiny move higher. It has eked out a new high just by the decimal rounding points that you can see there. The Russell 2000 did go up 0.5% today, but at 1505, it's still below its October 5th trading high, closing high, I should say, of 1512. But again, just one day after touching it intraday, the Dow closed above 23,000 today for the first time. Investors are now ready for a trio of big earnings after the bell here, and we have reporters standing by to bring us those results. Leslie Picker will bring us Amex. Aditi Roy is covering eBay, and Phil LeBeau is watching for United. And we'll see you guys in just a couple of minutes. Joining me on set today, CNBC senior markets commentator Michael Santoli, Karen Feinerman, CNBC contributor from Metropolitan Capital, and Jason Trenner checks in as well. He's from Strategas Research Partners, of course. Let's just start with some of these market moves today. The Dow closing above 23K for the first time. By the way, it's the 51st record close of the year. That means about 1 out of every 4 sessions this year has been a record close. The big winner in the Dow was IBM today, with a huge move higher, nearly 10% we're talking. The biggest loser was Chevron. IBM also topped the S&P 500 as the biggest winner, and the biggest decliner there was Allergan, Michael.
Yeah, I mean, IBM, obviously the story with the Dow, got it decisively over 23,000. I think it's, all those numbers that you recited, 1 out of 4 days this year, a new high. It's a bull market acting like a bull market, though I think this week it's familiar based on last earnings season, where the market kind of gets held in place near the highs as all the earnings kind of offset one another. Not a bearish thing, but just something often leads to a pause. Karen,
do you think people will kind of put an asterisk on this because of the IBM move?
Yeah, it's sort of old school that the Dow, which we don't really follow as closely, right, was driven by the beat in IBM. So I don't even know how I don't know if that IBM inflection point has really been hit or not. I'm not even really sure, but it was enough clearly to get the market excited.
And that stock, by the way, up about 9% in terms of IBM. We're talking about its strongest performance in quite some time, and its best day since January 2009. It traded above the 200-day moving average for the first time since April. And even despite all that, the stock is still one of only 5 Dow components that's negative for the year, Jason.
Well, listen, I think this is, I know it's a cliche, but it seems an awful lot like Goldilocks. And I think you were talking about the Dow, Kelly, which is 51 record highs. I think the S&P is 62 record highs this year. Wow. And it's Goldilocks just to the extent to which growth is picking up. Inflation still seems largely quiescent, and you still have a largely accommodative Fed. So it's really... And you're also going into a seasonal part of the year where it gets very hard to fade the market. So, of course, a correction could happen at any time, but the fundamentals to this look awfully
30 years
strong.
ago.
Right, precisely.
Mike, I was just going to bring up something that Matt Cheslock said last hour, which caught my attention. He said maybe with IBM, people are starting to look at the only names that haven't been powering us forward and go, geez, I better pick up some of these bargains while they still have them.
Right, no, it gets very stretched when you have a stock that was down from 180 to 140 over the time that the market continued marching to new highs. So yes, there was some tension there. Also, for a huge $150 billion market cap company, it's relatively heavily shorted. Short interest is like 6 days worth of average trading volume. That's more than Tesla.
Wow. Wow.
I mean, because Tesla trades so much.
Yeah,
but just to keep in mind, people were leaning against this stock, and it becomes dangerous to do that. Now, look, there have been false dawns in GE. You thought GE was about to make that turn, too. So there's nothing guaranteed. But yes, it's very tough to lean too hard negative in this kind of a tape.
Is it a company you're scrambling to invest in at this point, Karen, or would?
No, not really. I mean, I guess I'd probably rather buy it higher with a little more confidence that a turnaround has actually happened than buy it right here and hope that that's the case.
Yeah, the company says the revenue inflection point is coming, so they have a couple of quarters to show us that that's going to be the case. Healthcare and tax reform on top of Washington's agenda today. Tennessee Senator Lamar Alexander saying he will work with the president to improve a bipartisan health care deal to fund Obamacare payments. This after President Trump tweeted he couldn't support bailing out insurance companies. It's been tricky to follow this one for the last 24 hours in terms of health care. There's the tweet from the president where he said, quote, "I can never support bailing out insurance companies who have made a fortune with Obamacare." Again, the market's kind of sailing past this one. Meantime, Treasury Secretary Steve Mnuchin telling Politico that the stock market gains have been tied to tax reform expectations, so that we'll see a significant reversal if Congress doesn't get that done. Jason, you buy that?
I do to a certain extent, although I'm not sure. I think he's protesting too much. I think the market, by the end of August, most of the questions we were getting from clients were largely along the lines of, would Donald Trump finish out his first term? So the expectations have changed a lot in 5 or 6 weeks. I don't think the expectations really for the administration have been all that aggressive. I think the president has had, and the administration has, a good 5 or 6 weeks. I think, again, the fundamentals are quite strong, regardless of whether you have. Well, since Labor Day.
To pass the whole thing? Yeah.
Well, no, I think
had a good 5 or 6 weeks.
He's had a good 5 or 6 weeks. We were expecting you to get some sort of tax relief by the end of the first quarter. I think that would help economic growth. The irony if that happens, Kelly, though, I think, is that the economy might do better, but the asset markets might do a bit worse because interest rates will start to go up. People start to worry a little bit more about inflation and all the rest.
Jason, to that point, it was suggested that maybe that was Mnuchin's intent today. I mean, should policymakers think about leaning against this rally at all?
Well, listen, I think, I personally, I don't talk to the administration. I don't know if I would lead with the stock market. I think it could be a very demanding mistress. I think it can work out okay when it's going higher, but you could also get, hung with it when it's not doing so well. I would focus more on the fact that the economic growth is better and that business confidence has picked up meaningfully. And I think that has a lot, I think the administration can take a lot of credit for that.
All right, we also had an IPO down here today. It was Chedian. Anyway, it's a Chinese company up more than 20% on its debut here at the New York Stock Exchange. It's a leading provider of online small consumer credit in China. It's the 5th Chinese IPO listing at the NYSE this year. QD, Michael, we'll just go with the ticker. QD's
a good ticker, absolutely. Quarter deck's not around. Look, I think I was trying to count up.
Quarter deck?
I don't know why I thought of that. I was trying to count up all the buzz phrases that are captured in this company. So it's fintech, it's Chinese consumer, it's mobile, and it's microfinance. Okay. So that's good for 20%. But also the IPO market in general has acted a little bit better, excluding some of the high-profile flops. If you look at the IPO index or the ETF, it's been outperforming over the last several months. It's a sort of a risk appetite gauge at these fresh young companies.
What do you read from it, Karen, if anything?
I mean, I agree with Mike. It's always interesting to see what's in favor, like what's in fashion, what can get done. A few months ago when Lending Club had all of its issues, I think this deal probably wouldn't have flown at all. I don't think they would have brought it, but, good job for them to getting it done.
It's also interesting because today the Chinese Congress kicks off.
That's the 18th?
The what?
That's a lucky number. I think
the 18th?
Yes.
Yes, because 8's the lucky number, right?
Right.
Anything with an 8 in it. But is this evidence that no matter what the politics of that may be and the struggles to that people still have a huge appetite for this part of that economy? I mean,
there's no doubt about that. I mean, and in particular, the Chinese consumer. This idea that you have, mobile internet in over 1 billion sets of hands. Yes, that's a shock, and they're leapfrogging different parts of our industry, right? They're going right to mobile everything, and there's so much data that they can basically mine because of that.
All right. We mentioned some big earnings are headed our way this hour. American Express earnings are out. Leslie Picker has those numbers for us now. Leslie?
Hey, Kelly, that's right. We're looking at a beat on the top and bottom line for American Express. On the bottom line, we're seeing EPS of $1.50. That was versus estimates of $1.48. On the revenue side, the company posted $8.44 billion in revenue versus estimates of $8.29 billion. They also raised their guidance to $5.80 to $5.90 versus $5.74 estimates. And so you can see there the stock's up just a little bit, about 1%. American Express shares have gained about 53% over the last year, so they really had to knock things out of the park to get a decent pop on today's earnings, but certainly nothing to cry over there, Kel.
Leslie, thank you. Mike, any thoughts?
Yeah, it's had a great run. It seems like there are still skeptics, though, to be won over. If you look at basically the street is not loving the stock right now, and so I do think that you have more of a possibility of people liking it. I think it's also had a little bit of a halo effect from Visa and MasterCard, some of the great growth stocks right now, just because it gets kind of lumped in with the payments world. They have their own payments network, even though it's a smaller, closed one.
It's true, though, that when people talk about the Visa and the MasterCard, Amex is the afterthought. I mean, it's there, but it's not. I mean, Karen, what do you think?
Yeah, well, it is a bit of a different animal, right?
Yeah.
They do take credit risk, which Visa and MasterCard don't, so there's that. So we might want to look at their credit losses, which have been very, very low. Even if they tick up a little, still very, very low. But, I mean, to me, it's challenging. It's very competitive now. You saw the Chase Sapphire, how competitive it was to sign up people. American Express, I think it's an expensive product that they offer. Millennials aren't quite as enamored with it. So, I mean, we'll clearly look and see it trades at a very big discount to Visa and MasterCard.
With Halloween coming up, too, I'm reminded we had the millennial on who dressed up as the Chase Sapphire card for Halloween because they were so excited about some of these offers. Now, American Express did try to come back, and
yes,
that
that's
was their
expensive.
own discount.
Right.
Yeah.
They're trying to fight back, but it's expensive to do it.
Yeah.
Millennials must love Halloween. You go around and they give you free stuff. Right?
Michael, it's not.
But you have to leave the couch. You actually got to go around and do it.
That's right.
So,
True
I don't know.
No more
Maybe not.
millennial bashing is allowed. Jason, Turner, anything you'd want to add on Amex there?
On millennials or on Amex? I have a lot on millennials. I have a lot of material on millennials.
All right.
I have to say, though, as far as the financials, generally speaking, though, it's our strongest conviction idea at Strategas. And I know I'm not a stock picker like Karen or Michael, but financials, in my opinion.
You would lump. Is Amex a financial for you? Maybe that's a dumb question, but
no. In my opinion, it is. I mean, just to the extent to which it's probably pretty levered to interest rates and really just the economy in general. I put it in the reflation trade at the very least. And in my opinion, you're setting up for probably what is likely to be a very good holiday season. We had a chart earlier this week where we showed wages versus core inflation. You are starting to see in the beige book, wages are starting to pick up. You're starting to get some, people are starting to get some wages through.
Yeah.
And that you do that in a context of still low inflation. That's augurs well, in my opinion, for Amex and the financials.
Yeah, the line that caught my attention from the beige book today was the Fed saw growing use of sign-on bonuses to attract workers. I mean, that is not the kind of line you typically see in this thing. By the way, Amex has reversed lower. It's down by about 0.5% right now. Also wanted to circle back to some of the moves with rates today. Despite that record high for the market overall, some of the bond proxy sectors like utilities and telecom were lagging the market, especially telecom, Mike, which was down about 0.5%.
Yeah, even though, bond yields are not racing higher, they're sticky at these low levels. To me, it's more about whether the street wants to be more defensive or offensive. And so it's right now, I think cyclical is where the money is flowing right now. And it's probably the reason that these guys are suffering in concert.
And how does that fit in, Jason, with what you were saying a moment ago about the financials?
Well, listen, I think it fits pretty well to the extent to which I think a year from now interest rates will be meaningfully higher, both short rates and long rates. And
what if you're wrong?
Well,
especially on the long rates.
Well, that happens. That happens more frequently than I care to admit. But in my opinion, a lot of this, of course, it goes back to maybe what we were talking about before. A lot of it hinges on the administration getting a good part of its economic agenda through. I think as far as deregulation of the financials and the energy sectors, I think that's already happening. That's not on the come. That's already very evident, and I think it's going to show up in the earnings. As far as taxes are concerned, obviously that's very much up in the air, and it's going to require some political capital to get that through. But we remain optimistic. In my opinion, that augurs well for economic growth next year. The irony might be that it might not lead to as strong a market as we've had this year, just because interest rates will start competing with PEs.
Jason, it's Karen. Let me ask you a question. Do you think that the market would sort of rather have the hope of a tax plan, but not quite there yet, as opposed to a very, very watered down one that doesn't have as much punch as the administration originally hoped?
Well, I think, Karen, it's a great question. I think in some ways it might be better to just have the hope of a tax plan without any tax versus no tax plan at all. And that's simply because, again, if you're at the verge of adding a lot of stimulus to an economy that's already, in my opinion, getting tighter. Certainly, the unemployment rate is 4.2%. I'm not so sure if you look at the beige book, there's as much slack in the labor market as some people might think there is. Yeah. So that becomes, inflation is something, 6 months ago we were worried about deflation, and we were for about 8 years. Now, I'm starting to just try to look a little bit further ahead, and again, you're going to have perhaps some competition for equities where you're going to go for it regardless. It'll be a good time. It might speed up the time at which you actually start to get worry about a recession.
I wanted to circle back to this old world theme of today with the Dow leading the way, IBM, contributing to that, and Bitcoin was lower. That's the trifecta.
The anti-Dow, right.
It's the triumph of the 90s or something like that.
Right.
But it was down. There was some talk, Karen, about the CFTC maybe trying to step in and regulate it. But at the same time, this was hardly a blip in what has been a huge move higher. And you think there's real potential with something in that?
I actually do. I mean, I'm a value investor, so it's a very different kind of investment. It's really the idea of, I believe that cryptocurrencies have a place. And I feel like it is early in the internet. I don't know which of these cryptocurrencies is going to be a Google and which is going to be a PetSmart that, I don't know if is it pets.com maybe? I'm sorry, PetSmart.
Have you been drinking the Brian Kelly Kool-Aid? Is this what happens?
Brian has done a masterful job for me. He really has. As I said, I don't know which one, but somewhere in there is going to be huge value creation. Already it's happened, but we're far from the end.
But at what point do you just keep hanging on to this thing? Because I don't know if you look at it, you go, I'm up 500% for the year, whatever it is, when you balance it out with some of the other coins.
Well, the first thing I do is just take all the money back and, play with the house's money. But at some point you got to be disciplined and take more money off the table. But it's horrifying to watch on a day-to-day basis. I really should just not look at all.
Right. We had quite a bit of volatility today.
We did. And, and a lot of people have said, look, early days of the internet, there was a Netscape, which changed the entire world. As a company and a stock, it didn't work that great. But you had to invest in the concept, not the company.
All right, let's move on to another old world type of story. United Continental's earnings are out. Let's get to Phil Bowe with those numbers. Phil?
Kelly, United shares are flat after the company reported third quarter earnings that were better than expected in terms of the bottom line, coming in at earning $2.22 a share. The street was expecting them to earn $2.14 a share. Revenue just a smidge above estimates, coming in at $9.88 billion. But the two metrics that'll get the most attention, passenger revenue as well as cost per available seat mile. Passenger revenue fell 3.7%. That was in range with the estimate of the guidance that the company had put out not long ago, where they said it would be down 3 to 5% in the quarter. And then you have cost per available seat mile up 3%, and that's largely due to fuel and labor costs. Don't forget, tomorrow morning, a CNBC exclusive on Squawk Box. We will be talking with Oscar Munoz, CEO of United Airlines, not only about the third quarter, but the outlook for United Airlines. Kelly, back to you.
All right, Phil, thank you very much. Mike, they've gotten over the high-profile issues with Dr. Dow. In fact, I think I just saw a couple of the guards who were responsible for that were fired. What do you think about the earnings?
I think it's going to go with the group, to be honest with you. I mean, I'm not that conversant with what's going on here. It's very, very cheap. It's all about whether people think that the revenue per mile can go a little higher from here. I mean, that's the whole story. They're off their highs. They've bounced. And I think it's a matter of a show me from here.
Karen?
Yeah, they're all very cheap on a PE basis. Really, the question is, are they going to rein in the capacity? They had shown a good job of doing that, and then it started to get a little more difficult, a little more competitive, a little more capacity adds. Hopefully that is under control. I'm long United, Delta, American. They all trade together.
1 second. We have some breaking news back on American Express. Leslie, what's happening there?
American Express announcing a management change here with Ken Chenault stepping down as chairman and CEO. He is retiring after 37 years at the company. He is being replaced by Stephen Squeri as CEO and chairman. That will be effective February 1st. You can see American Express losing some of those gains that it made earlier after it reported earnings. We're digging through the release and we'll let you know what else we learned, Cal.
Leslie, thank you. Yeah, the stock is now down about 1%. There's a lot here. A joint statement that includes remarks by Mr. Chenault, also the Robert Walter, who's the lead director of the company's board of directors. They even have a comment from Warren Buffett, who says that Ken has been the gold standard for corporate leadership and the benchmark that I measure others against. He says he led the company through 9/11, the financial crisis, the challenges of the last couple of years. Amex always came out stronger. He never went for easy short-term answers, never let day-to-day challenges distract him from what was right for the moderate to long term. No one does a better job when it really counts, and he's always done it with the highest integrity. And it goes on. So those are the comments from Warren Buffett that are quite supportive, Karen, of the CEO who's now leaving American Express.
I don't think it's that shocking. I think people wondered, all right, it probably is not going to be in the not too distant future. Maybe timing is a little unusual, but I think they've been planning this for a while.
It's interesting because a couple of years ago there was an activist in American Express. I think Value Act was in there. They weren't just saying that they should change CEO, but they made the case that management was maybe tired, should be revived. A lot of other changes they advocated. They kind of shed the activist pressure. And I don't want to read the market's mind here in terms of a negative reaction, but it does seem maybe a little bit abrupt. They didn't necessarily prepare. Certainly it's going to be sooner than later because of how long he's been in the job. But maybe it's just a question of they didn't necessarily kind of lay the groundwork for the move. And the incoming CEO comments in the press release that he feels good about what's been accomplished. And while it's a fast-moving competitive marketplace, I believe we're in a strong position for the years ahead, he says. Of course, mentions digital convergence underway in payments and commerce, which ties back to so many of the other stories that we're covering today. Jason, a last word before we let you go. American Express is down less than 1% now on the news that Ken Chenault is leaving?
Listen, I would view it largely as buying opportunity for many of the reasons I said before. And again, I'm more of a macro guy. I know there are significant challenges, competitive challenges from Visa and MasterCard. By the same time, I think, from my perspective, given where we are in the economic cycle, which in some ways I think we're very much in the middle of it, not towards the end. And I think we're probably in the very early stages or relatively early stages of the interest rate and inflation cycle. I'm a buyer.
All right. Guys, thank you for joining us. A lot of news, fast moving at this hour. Karen Feinerman and Jason Trenner, very much appreciate it. Aditi Roy has the numbers. Aditi?
Hi there, Kelly. Shares are slipping about 5 to 6% right now, even though it was a slight beat on the top line. Revenues coming in at $2.4 billion versus estimates of $2.37 billion. On the bottom line, it came in line with expectations of 48 cents a share. One possible miss for eBay could be the active buyers. That number of active buyers are 168 million versus analyst expectations of 171 million. Analysts have been pretty bullish on that number, considering the company's been investing a lot of money in their website redesign and focusing efforts on driving more traffic to their site. On the call, we'll hear more color on that, as well as the company's holiday sales strategy and how they plan on taking on Amazon. Again, shares are down about 5% right now. Kelly, back to you.
Aditi, thank you, Mike. Just because it's such a big downward move and because its spin out PayPal has been having such a banner week, it surpassed Amex in market cap. It's earned, should eBay have kept it?
Well, you can't do the counterfactual. I mean, basically, PayPal is given that capitalization because it's a standalone thing. You often see that where you have an older, steadier part of the business. It's interesting. We think about the Amazon threat mostly as very old economy as the victims. eBay is actually kind of a digital economy potential Amazon victim. That's why I think the market's very sensitive to things like fewer active users.
Great point. And eBay is down about 6% after hours. Now, Ben Axler's Spruce Point Capital initiated a short on Tootsie Roll Industries. It's the maker of the Tootsie Roll, but not just that, also the Blow Pop and Junior Mints over here. This is my dad's favorite movie theater snack of all time. The stock is down more than 6% this year. Axler is saying it could fall as much as 50%, citing changing consumer tastes and industry regulations. We did reach out to Tootsie Roll for comment, but the company has yet to respond. Mr. Axler is here with us now. Shares down about 2% today. What would make this stock fall 50%, though?
Well, we think there's an inherent M&A takeover premium in the brand. That's long been the bull case here. But what we find when we do our channel checks is that they get the worst product placement on the shelf at the bottom, all the way at the back of the store. The brand is not resonating with the health-conscious consumer that is wanting more nuts and fruits here. You know,
or at least something that pretends to be healthy instead of just presenting itself as a candy.
Well,
I mean, can we talk about Kind bars? That is not a health snack. It's a candy bar in Kind clothing.
Yeah, well, this is even worse. I mean, the new labeling will illustrate that there's a tremendous amount of added sugar here. The Junior Mints, you can get 160% of your daily value of sugar just from a box there.
All right, don't
get a head start on tomorrow.
Michael, what do you think about this call?
Well, there's no doubt about it that forever Tootsie Roll has been considered just a takeover candidate. I mean, that was the whole reason to own it. Now, you did have the very long-time CEO passed away at the age of 95. I think that's against what you're saying about the attractiveness of the business itself.
Well, you're right. So her husband passed away 2 years ago.
Yeah.
They've made no changes or any suggestions or given investors a succession plan of why this company would be sold.
It's run like a family business in a sense.
Exactly. Yeah. It really shouldn't be public. They don't communicate well with investors, don't hold conference calls, don't give a lot of disclosure, and it's priced already as if it's been taken over. We just don't see any upside there at the current level.
I love Andes Mints, and I did not know that they owned Andes Mints, and they wouldn't let me eat them last hour. The other thing I'm just wondering about, though, I think back to Warren Buffett's Berkshire Hathaway and what they did with See's Candies. They took a company that would seem to catch nobody's attention, and they said, you know, we can wake up any day and just raise the price on it, and it's contributed a bunch of capital to Berkshire over the years that they've turned into a whole other thing. I mean, is it declining that rapidly that they can't raise prices a little bit every year and have a decent business going?
Well, here's the big problem with that. The largest customer is Walmart. Walmart is notorious for squeezing margins, getting the best prices. We think it's going to be very difficult to get more margin out of there. And on the topic of margins, we've noted in our report, we think Tootsie Roll is overstating their margins. They're not including costs, warehousing, distribution in the cost of goods sold. So we think their gross margins are inflated by 800 basis points.
8 percentage points is a lot.
Correct.
So if they restated that, do you think the shares would drop substantially?
I think the bigger issue is the cash flow. Actually, we think the cash flow has been cumulatively overstated by $50 million. They've been using cookie jar accounting to take back premiums they paid to some insurance policies for executives a number of years ago. There's a lot of financial questions here,
right.
Not a company that's playing above board.
I'm going to hand this out for Halloween along with some of the better brands. And we're going to
do a test.
Do a test.
A/B test.
Because I understand your point that the kids these days they're not real excited about dots showing up in the Halloween
This
basket.
might be a completely tangential point, but I always associate things like Junior Mints and other candies like that with movie going.
Yes.
I mean, is that actually a big channel for them? Is there a way to quantify that? They may not disclose.
Well, again, they won't tell you what percentage of their sales are even Tootsie Roll, Junior Mints by channel. We do know that Walmart's the biggest end customer, and that's going to be our challenge for margins.
These Junior Mints would cost $6 at the movie theater. They got to be doing a decent business with that. Ben, thank you for joining us. Appreciate it.
Thank you.
Ben Axler. It is time now for a CNBC News update. Let's get over to Sue Herrera. Sue?
Hi, Kelly. Thank you so much. Here's what's happening at this hour, everyone. The Florida representative who accused the president of making an insensitive remark to the widow of a fallen soldier is standing by her account. Frederica Wilson of Florida says she is not the only one who heard. The president denied it, saying, quote, "I did not say what she said," end quote.
Iran are on the move after hours. Let's send it to Leslie Picker for a market flash. Leslie?
Hey, Kelly, that's right. The company is releasing preliminary financial targets for its fiscal year 2018 that pleased investors in this stock. They've reported non-GAAP EPS of approximately $5.50 per share. That was above estimates of $5.21 per share. They also projected revenue to be about $8.7 billion, which would be about a 20% year-over-year growth in fiscal year 2018. They're briefing investors and financial analysts today and this week at their Adobe Max user conference, and this is just some of the things that they're discussing. Back over to you.
Leslie, thank you. Big move higher for Adobe Systems, nearly 6% this afternoon. Keep an eye on that one. But it's time now for today's Fast Take. And let's begin with remember how JP Morgan was interested in buying that payments company WorldPay, the one that Vantiv bought $10 billion back in August? Well, now JP Morgan is buying WePay instead. WePay is a fraction the size of WorldPay. It's a startup, last valued around $250 million a few years back, but its software is used by business sites like GoFundMe, Michael, and we know this space is so hot.
Absolutely. People want to spend differently. I think every calculation of big, huge markets that are still kind of using archaic means comes you brings you to payments. It brings you to so many cash and checks being used and swipes of cards. So anything that kind of leapfrogs you, I think, is going to be appealing to a JP Morgan. And also, since I know you're watching the baseball playoffs,
I am.
How many times have you seen those B of A ads about their app for splitting cards? It's a Venmo killer.
Yes, exactly. No, but it is. We talked to Tom Brown about this. He said, look, as soon as they throw their weight behind this, that's why Venmo's now going to the store. Anyway,
they have other things to do.
It does feel like the beginning still of what's going to happen for this sector. Next, ratings are coming for Netflix. Nielsen is launching a new service for subscription video on demand platforms. It'll track the number of people watching and more details, things like their gender and ages. Netflix is the first streaming service to be tracked by Nielsen, but Amazon Prime and Hulu are likely to be added next year, according to TechCrunch. What does this tell you about Netflix and what it may do? So, it doesn't sell advertising now, but that's kind of the point of Nielsen data is to
Yes, that's one of the main things. Obviously, it means that Netflix is dominating eyeball hours, right? So incremental watching is happening largely on streaming. And so Nielsen wants to essentially be able to track that for whatever customers want the data. And I can think of a couple of potential customers who would be really interested. Who would be interested? Exactly. Besides the media, if you have a show that you want to sell into syndication or sell to Netflix, you want to have an idea about that viewer profile and what the value of it might be, what works, what doesn't. Of course, Netflix thinks it's all proprietary, and they obviously want to use it for their own.
And I understand that, but I still hope that at some point we all get the numbers. And finally today, Richard Branson lashed out against Alaska Airlines on Squawk Box this morning. Listen.
The sad thing is that Virgin America has been voted, best airline in the States 12 years in a row by Condé Nast Traveler, and it's a great airline, and I think people love it. And I think Alaska are very foolish to just absorb it. Big companies often do this. They make them, they buy something because it's doing so well, and then they castrate it.
So the thing to me about this is I kind of see where he's coming from. I mean, what is the point from Alaska's point of view of buying Virgin Airlines and then getting rid of the brand when it's done so well?
I mean, obviously they hope that it can work to kind of, the brand halo can go toward their other business. It is a little bit odd, especially considering Alaska Air, the name of the company is not very descriptive of the whole business, right? It's very local.
If anything, if I were them, I would have taken the Virgin name.
Yeah, I mean, look, Virgin is also very much identified with Richard Branson, with his other businesses that he has started. So I could see maybe not going with that. I could also see why he is in particular very sensitive to the idea of abandon it. So it's an odd judgment call, but there are a lot of politics involved when you're integrating a new company.
And that's what he was saying. But we also know Virgin will be on the Hyperloop now. So we closed above 23,000 for the first time today on the Dow, and decisively so with a 160-point rally paced by IBM, which was nearly 10% higher today. Meanwhile, the S&P 500 and the NASDAQ saw much smaller gains, but still closed at record highs. And the Russell 2000, despite being up 0.5%, is still about 7 points off its all-time high. Now, President Trump is no longer supporting the bipartisan agreement reached late yesterday on Obamacare, saying continuing federal subsidies will only benefit insurance companies. Here's what the president said earlier today.
If something can happen, that's fine, but I won't do anything to enrich the insurance companies, because right now the insurance companies are being enriched. They've been enriched by Obamacare like nothing anybody's ever seen before. I am not going to do anything to enrich the insurance companies.
Joining us now is Ipsita Smolinski. She's managing director and healthcare analyst at Capital Street. Ipsita, welcome back.
Thank you.
It's been kind of hard to follow what's happening with this healthcare reform over the last 24 hours or so. Where do you think things stand currently on the Alexander plan that might fix some of the, subsidies, you might call them, to these insurance companies?
So the stabilization bill, there was a deal announced yesterday, but really that deal was just between two senators, Murray and Alexander, and Trump at the time praised the deal. It's far from certain as far as whether it gets passed. If it does get passed, it might not be for several weeks anyway, at which point it might just be too little too late. Open enrollment starts November 1st. It's a condensed open enrollment. It only goes until about December 15th. As far as whether it gets passed, if it does get passed, it might not be for several weeks anyway, at which point it might just be too little too late. Open enrollment starts November 1st. It's a condensed open enrollment. It only goes until about December 15th. So part of that package includes money for marketing, advertising, So right now, I think insurers are bracing themselves. They've got this all hands on deck mentality, and they're sweating it out. They know enrollment is going to be lower next year in 2018 versus this year, 2017, for many reasons. And so I think while the stabilization bill is a step in the right direction, it really might be too little too late.
Yeah, because November 1st, as you said, is when this will begin. So are the rates that people will see, are they set already? And do they include these payments or not?
So some of the big national insurers like Anthem, Molina, Centene, they essentially for 2018 assumed that the government would not provide those CSRs, those co-payment CSRs or cost sharing reduction subsidies. So they were smart. They assumed that the government wouldn't pay them out, and they included them in their rates, which of course makes rates about 20% higher, but at least they realized that they would be okay in 18 if they did that.
Yeah. So what you're saying is when people go to look at their plan, when they look at the available plans come November 1, they're going to see that a gold or a silver or bronze plan is probably going to cost them at least 20% more next year than it did this year?
Exactly. There'll be sticker shock, no doubt. And again, insurers are not expecting next year to be a banner year. We've had about 9.8 million in the individual market, in the marketplace. The number will be vastly lower because of three things. Number one, this condensed open enrollment season. Number two, there's no marketing, there's no advertising dollars. And then number three, there's a mandate penalty, which is this requirement that all Americans have insurance, and that's really just not being enforced. Now you may not have CSRs, so it's really the perfect storm, and I think insurers have an all hands on deck mentality, and they'll be sweating it out.
And yet they are trading at basically all-time highs. We'll see what happens in the next days and weeks. For now, Epsita, thank you very much.
Thank you.
Epsita Smolinski there. Alexa is heading for Kohl's. The department store chain is hoping Amazon's AI product and other services will create an experience and drive consumers to the retail chain. Courtney Reagan joins us with more. Courtney?
Hi, Kelly. So do you have an Amazon return? Are you curious about how Alexa can help you connect your home? Well, if you live in Chicago or LA, head to Kohl's. Today, 10 stores in those cities can help you with both. 72 more stores will add those features in coming months. So Kohl's employees will actually pack up and ship back your returnable Amazon fulfilled orders for free. It happens just inside the front door. There's even dedicated parking spots for those making Amazon returns. The returns is located inside the Amazon Connected Home experience. There, Amazon employees will demonstrate how an Alexa-enabled device can do things like turn on the lights. Michelle Goss, who takes over the C-suite in May, is spearheading the strategies.
We've challenged ourselves to think really differently about what type of customer experiences we can bring to our customers. And I think this is a phenomenal example of just that. It's courageous, it's unexpected, and we're really excited to introduce this new experience to our customers.
So, of course, the big question is this will actually bring Kohl's traffic that converts into sales. There's no obvious downside for Amazon that I can think of, but Kohl's is risking that consumers just use the returns or the home demonstrations, but not actually buy anything from the department store. Goss says Kohl's and Amazon can complement each other. She thinks there's plenty of room for everyone on the other side of this retail transformation that we're in. Kelly?
We desperately need faster, easier returns in all of the stores in the mall. I'm going to go check this out, Courtney, as soon as I get out that away.
All right, awesome.
I'll let
Thanks,
you know what
Kel.
I think. Thank you, Courtney. Verizon is slightly higher today in advance of tomorrow's earnings release, but if it's anything like AT&T the other day with those subscriber numbers, well, maybe the market's a little nervous. Julia Borsten joins us from LA with the preview. Julia?
Hey, Kelly. Competition, cord cutting, cost cutting, and content deals. Those are the 4 C's to watch in Verizon's earnings tomorrow. Now, analysts expect revenue to decline about 3.5%, 98 cents per share, while revenue is projected to grow 1.7% to $31.5 billion. Now, Verizon's shares have been down about 10% year to date. It's been facing growing competition, with Comcast and Charter recently entering the wireless space. The company is expected to report roughly the same net subscriber number as the year-ago quarter. There will be likely a big focus on cord cutting in its earnings call tomorrow, and Verizon Fios' TV customer base after rival AT&T pre-announced video subscriber losses. despite growth of its streaming service. And when it comes to costs and content, tomorrow we'll look for elaboration on CEO Lowell McAdams' comments last month that Verizon will cut $10 billion in costs over the next 4 years. McAdams also said last month that the company was working on content deals for its mobile and TV service. He said he'd announce something by the end of last month, so we're overdue for an update on Verizon's content plan. Kelly, back over to you.
That itself is interesting. Julia, thank you very much. Julia Borston. Coming up after the break, our longest closing word ever. I'm not even going to, well, I should say, it's quinennial. It barely fits. Can you imagine if that was your actual Scrabble word? Anyway, we'll tell you why we chose it right after this.